Welcome to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They are the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, good morning. How are you? Let me start with you, Judd. How are you?
Good morning. I'm doing great. How are you today?
I am fantastic. Always a pleasure to see you.
You too.
And Stewart, always a pleasure to see you. How are you today?
Oh man, I'm doing awesome. Having a great time.
Good. I'm so glad because you've both been so incredibly busy. Let's talk about that. Life in the office, Stewart. What's that been like lately?
Well, you know what? It's been crazy because when I get to meet with clients, people wonder how I can work 6 days a week and 8 to 12-hour days. It's because honestly, I surround myself with people I like, and including clients. It's the one thing I tell my clients is make sure that if you're dealing with an advisor, make sure you like them. So, hopefully my clients like me, but it's important, when you surround yourself with people you enjoy, the days fly by. We're having a great time. The one neat thing about people coming into the office is, for the first time, they always say, you know what, Stewart, you're exactly the person that you are on TV. So if you don't like me on TV, don't call us because that's who I am. You call Judd, you probably like him a little bit more than me anyways. He's quite the personality guy. I know he comes off as a numbers guy, but he's great, so.
Aw, you guys just make me laugh. I love it. Judd, anything you want to add?
Well, I would say, obviously, we have had a lot of success with the shows, and a lot of new clients have come to us over the last year or so from that. But again, I just want to say thank you to all of our loyal and existing clients that are out there, whether you've been with us a month, a year, 20 plus years. We thank you because obviously we wouldn't have gotten here today if it wasn't for your support along the way. So thank you.
Absolutely. Well, gentlemen, I would love to talk to you about a little bit marketing, investing today if we could. Stewart, let me ask you, current market perspective, what is going on right now?
Well, we're seeing some incredible volatility, that we've never seen before in history. And, obviously when it comes to where the market is right now, I think the best place to look is the S&P 500. So if we have a chart here that'll show you the S&P 500 position, as you can see, we're at an all-time high, plus or minus a point or two. And the reality is this, that despite COVID, despite all of this, just remember the markets are at our all-time highs. And a big part of the reason that market is showing the result that it is quite honestly because of stimulus. Initially we had $3 trillion put into the stimulus pot. Another trillion or two is being suggested. We'll see what happens, right? So a lot of those numbers, you want to enjoy the ride of it, but just also, if the next stimulus plan doesn't come, it's very possible we see some substantial pullback, and you just need to make sure that whatever plan you have is taking that into account. And I think a lot of people that have 401ks that are kind of self-investors, they'll buy the S&P 500 by itself, which has done extremely well. They've just been enjoying this amazing ride for the last decade. But if this party ends, you want to make sure that if you're retired, you don't have to go back to work. And if you've been kind of making your own decisions on your 401ks, that you actually seek out some professional help to make sure you are truly diversified, that if the bottom falls out, that you have a plan to make sure that we're not all going to see a massive pullback in the portfolios.
Sure. That makes sense.
Yeah, and quite honestly, one of the things we do is we take a much different approach than a lot of advisors. A lot of advisors are taking a set it and forget about it approach where they buy 5 or 10 mutual funds that looks diversified, and that's it. And they just say, hey, don't worry, it'll come back. What we try to do is get out in front of it. It's not just about beating the market on the way up. It's about not losing on the way down. And one of the ways that we do that is by using a very tactical approach. Let me show you an example of a passive approach. So most asset allocation models use a passive approach. So whether it's 60-40 bonds, 70-30, 70, 10, 20, whatever combination of investments you have, the reality is that that's a very static model where people set it and they forget about it. what we do with all of our portfolios in-house is we use a very tactical approach. So what an example of tactical, one of our money managers has identified 6 very distinct stages in the economic cycle. And you just have to realize that if we're going into recession, there is a set of investments that are going to perform better than when we're, in an expansive area, of course, right? So just know that if you have the same investments at the end of this cycle that you did at the beginning of it, generally that's just laziness, right? Or you've got a lot of years of work left and you're not worried about risk tolerance or losing your money. So what we do is we try to get ahead of it and identify where we are in those cycles, and to make sure that, if the Armageddon occurs, that we'll be prepared for it.
That makes sense, Stewart. Judd, let me ask you a question about index funds. What's your thoughts on index funds, if you will?
Well, yeah, so Stewart kind of alluded to that a lot of these other portfolios that are put together are pretty much like that. It's a set it and forget it type mentality. And, if you're in an index fund, if you go out there and invest in the S&P 500 or one of the other major indexes, the nice part is the fees are very low inside that fund.
Okay.
And so if we're in a market where things do very well and are in an upward trajectory, you're going to make money and you're going to pay very low fees. But when you tend to see what's happened over the last year or so, or even further back, going to the big drop in February, March of 2020, that's a time where you need to be active. You want somebody in there watching that, making those adjustments when that's going along.
Sure.
And even though the index have recovered through the V-shaped recovery that we had, it's not always going to be that way. If you have to take required minimum distributions from those accounts because they're inside IRA or qualified plans, you can't wait for it to come back, 11 months, 21 months, whatever that might be.
Sure.
So we believe that you should get with an advisor who is a fiduciary, held to that fiduciary standard, and have them take a look at it for you and find you the right asset allocation and diversification, not just a easy set it and forget it where they get paid regardless of how you happen to do in your investments.
Judd, thank you so much. Stewart, the fiduciary standard, let's talk a little bit about that, because Judd actually just mentioned that.
Yeah, absolutely. The fiduciary standard, I've always said, is a minimum requirement. If you are looking at your statements and you're like, hey, how am I paying for this, right? You have to realize, I ask clients all the time, what are your fees? How much are you paying for this? And universally, they'll say, I just don't know. I don't know what I'm paying. Well, if you don't know what you're paying in fees, that's a big problem. That should be a red flag to you, right? Because here's the reality. All of us get paid to manage money, right? Your retirement planner, your financial advisor, whatever, they're making money off of your money. And if you don't understand how that works, that's a really big problem. And listen, our main office is in Sun City. We're in, the retirement capital of the world here. And we see the same thing in Scottsdale, where these are clients that are post-Depression era folks. They're clipping coupons. They want to make sure that they're not wasting any money. So when they look at their statements, they don't see any fees and they're happy. Well, what we're seeing is that a lot of those fees are just hidden. They're hidden behind the funds that are being invested in. And that is not a fiduciary standard. So if we see a client that has all of these loaded mutual funds, these expensive loaded variable annuities, any of those kind of things, that is absolutely not a fiduciary quality account. And you need to make sure, if you're paying for a fee, you want to get something in return for it. There has to be something more than just the money management itself, right? And that's why we have our tax planning, our estate planning, all of those additional services wrapped into one at Asset Preservation.
Stewart, this is the perfect time for us to open up the phone lines to the viewers at home. Can you tell them what they can expect to receive by calling in?
Absolutely. So if you just get up off that couch and call 833-652-7829, what we'll do is we'll take a look at your portfolio, do a complimentary portfolio review. We'll show you what kind of fees you're paying, what kind of tax implications are down the road for you, and we'll give you our absolute second opinion on what you have there. Just call 833-652-7829. We'd be glad to take a look.
Judd, thank you so much. Stewart, thank you so much. To the viewers at home, the phone lines are now open. That number to call is 833-652-7829. We have to take a very short commercial break, but don't go anywhere. When we come back, we're going to have so much more about planning for retirement. Please stay tuned.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, a great show that we're having today, and I love just all the information that you provide to the viewing audience. I have a very important question for you, Judd, and I'm sure a lot of people in the viewing audience are wondering it as well. Why are not all advisors fiduciaries? Can you help me understand that?
Yeah, absolutely. I mean, the simplest part of it is going to be how their licensing is structured and set up, but a lot of it comes to how they make their living. And the old-fashioned way of working with an advisor, as a lot of us are familiar with, is there are these big box retail shops where they've got names that are named after the founding members of those firms. And when they work for that firm, they generally get some form of a salary, and then they earn fees and commissions based on the advice and different stuff that they do.
Okay.
As Stewart mentioned earlier, they might invest in a bunch of funds that, of course, are proprietary funds of that same broker-dealer where they hang their license. And where I'm going with that is, again, not that they're out to intentionally harm the client, but basically their obligation is to the firm, the broker first, which means to themselves first, and the client second. And so they are able to receive back-end commissions or fees by putting you in, it could be a wonderful fund that you could buy through us or someone else and pay a lower fee on it, or by getting it through their advice, you end up paying a larger fee inside. And you may not directly see it, you're not paying it directly to that advisor, but it does come out of your performance. So again, some of it's going to be based on how they're used to making their living. You know, they might want a client to park their money with them and never really have to deal with them for the next 20 years. Where again, when you're working with a fiduciary, the idea is, again, the better you do, the more money the fiduciary makes. You know, you do well, we do better.
Sure.
You do poorly, obviously we risk getting fired, but we make less money right along with you. So you know that our allegiance and is in line with what yours is.
Thank you so much. Stewart, how does someone know how much they're paying right now in fees into their advisor?
Well, I think that's one of the hardest questions for most people to figure out, right? So for some of them, they actually have fees on their account that are stated there. But like Judd was saying, is that a lot of these funds have fees that are just hidden inside, and you just can't see without taking a deep dive view of that. And one of the things we do in our complementary portfolio analysis is we take a look at what all those fees are. If you don't know what your fees are, you need to call us. Just give us a call, 833-652-7829. We'd be glad to sit down with you for an hour, do a complete analysis of your portfolio, and you will leave, I promise you, with more information than you came with.
Thank you, Stewart. Judd, let me ask you this question. Why is asset preservation tax in retirement different?
Well, I mean, I think the big piece is that we provide all of the facets that someone needs to build that secure retirement plan.
Okay.
And from that, again, our history, 20 plus years, just celebrated 24 years in business here in 2021. And we have come from an estate planning background, offering taxes since 2005. We do a lot of retirement and income planning that we've put together since 2013. And so what I believe makes us different is by offering all of those pieces in one place, we're really truly able to give them a holistic plan, look at the big picture, and truly address what it is that they need to handle. And a lot of financial advisors out there can be very competent and very good at what they do, but I know Stewart's alluded to it at other shows where they go to make a move and the person says, oh, well, go talk to your tax person about that. And then they're talking to their tax person, hey, should I move this around or what should I do here? Well, you need to go talk to your investment advisor. And so what we've done is we've put all of those under one roof, so you always know the left hand knows what the right hand's doing, and I feel that that gives us a leg up on the competition, but it also makes it much more efficient and much more cost efficient for our clients.
Absolutely. Well, Judd, this is the perfect time for us to go ahead and reopen up the phone lines to the viewers at home. Can you tell them what they can expect to receive by calling in today?
Yeah, absolutely. If you call 833-652-7829, Stewart or I will be happy to sit down with you, spend an hour basically finding out what your needs are, what you're looking for. We'll do some analysis for you. Obviously, if we need to sit back down to go over the tax side of it or those Morningstar reports that we talk about, I can tell you that you will leave us having a much better idea of exactly where you're at in your retirement planning, as well as what you have inside your investments from a risk standpoint to a fee standpoint. We'll make sure that we get all those questions answered. So call us at 833-652-7829, and we look forward to an opportunity to meet with you.
So kind of like a portfolio x-ray, if you will.
Absolutely.
Okay, thank you so much. To the viewers at home, the phone lines are once again now open. That number to call is 833-652-7829. This is a wonderful complimentary consultation that the gentlemen are offering you today, but all you have to do is pick up the phone and call 833-652-7829. We have to take a very short commercial break, but don't go away. We have so much more when we come back momentarily.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. You know, I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
Welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, a great show that we're having, and a very important question I have. I'm just going to ask you, Stewart, how important is it to have a second opinion? If someone's in the viewing audience today and they currently have a plan that they feel is working, how important is it to have another look?
I think it's huge. I think it's tremendously important to make sure that you have someone else take a look at what's going on. Now, we have clients that have these tremendous loyalty to the advisors that have gotten them this far, and I get it and I appreciate that. But a lot of our clients are snowbirds, where they came to Phoenix and they decided to come here during the winter time, and then sometimes that changes where they're here permanently, but they've been with the same advisor for so long, and they just inherently trust the people. And listen, just because they're a nice guy or a nice lady doesn't mean they're doing the right thing by you. Now, I'm not saying they're not doing the right thing by you, but you just want to make sure. And the best way to tell is by doing that complementary portfolio analysis that we do for our clients. And listen, sometimes now is not a great time for us. It's not a great fit because the clients are traveling back and forth and they'd rather, deal back at home. But it's really important to make sure that you get a fresh set of eyes on what's going on there, because honestly, everybody knows that you should diversify your investments, right? Everybody knows about diversification. Well, we also think that a diverse perspective on your investments makes sense as well. And I think that what we can do is give you a third-party view of what's going on inside your portfolio.
Stewart, thank you so much. Judd, let me ask you a question. How important is it to have a plan that's easily customizable if something changes in someone's life?
Yeah, I think it's one of those things where having the plan up front is obviously the biggest piece.
Sure.
And then if you've built that plan where you know that you have some flexibility for whatever life throws at us. Stewart talks about, we do some pretty extensive cash flow planning for our clients. And the idea is we want to dumb down the rates of return. We want to dumb down the cost of living adjustments on their Social Security and all those things. And then we want to overestimate inflation and all the bad stuff that can happen. And if you do that and you know that you don't ever run out of money, then you've got a lot of wiggle room in there for what might happen. So I think the first piece is making sure you've got a plan. And then, you want to know that you've built that plan well enough that you have some flexibility there to deal with it, and that you have the right people around who can see that plan through with you.
Absolutely. Stewart, let me ask you, how long does it take to customize a plan for someone? It sounds like it's quite time consuming for you both.
It is, but the reality is, the nice thing is we have a staff to do a lot of that for us, right? Like the best work I do is hanging out with our clients, understanding what's going on in their life, what's going on in their portfolio. And, we have a tremendous staff. We have a couple CFPs on staff. We have 2 enrolled agents, a CPA, certified tax preparer. We have a big staff of people that we can delegate those things to. And, so if we're doing a portfolio analysis, it's a couple hours of work to do that for you. And, I'm not doing it, but one of our CFPs is. And so it's really important to make sure that the people you're dealing with are competent, number one, they're credible, and they've been in business for a long time. And at the end of the day, yes, I know we've been in business a long time, but what's important is that, we really do care about making sure that our clients are, getting the best that they can, and also managing that risk. I mean, don't get me wrong, we've seen some crazy stuff in the markets lately, and we are not capturing the entire upside of the market. But you know what? We're not trying to. We're trying to make sure that if the markets start pulling back substantially, that, we are not going to have our clients hurt substantially by that. And I think it's important to make sure that whoever you're dealing with, that you believe that they're the best, right? And if you know that they are not, if you really have a sense that, hey, you're settling for second best, I think you really should think about, at least consider getting a second opinion. You know, if you're in trouble, you would call the best lawyer possible, right? You wouldn't settle for second best. And I think the same standard should apply to your financial advisor as well.
Stewart, thank you so much. Judd, let me ask you a question. Let's talk a little bit about someone that maybe came into the office recently that had been talking to different advisors and chose to work with you and Stewart. Tell us a little bit about that experience.
Yeah, I mean, what's really nice about it is we get up here and tell you what we think is the best about us, but we actually get that feedback from the clients that come in.
Sure.
We have someone who sits down with us and says, well, I've been with an advisor for years, and they never even looked at doing Roth conversions. We'll get someone who's been with a tax person for years and years, and they say, well, they've never asked me about that. They've never recommended that. So for us, it's when they come in, get a chance to sit down with us. Obviously, we feel like we give them a lot of personal attention as we go through and look at everything, but I think some of it's just that big picture approach. We're making sure that we're not going to make changes over here that's going to cost them drastically or dearly over here. And in doing that, they really feel that they are taken care of and secure. Because some people want someone to just give them little tidbits and point them on their way. Other people want us to lead them. They want to relax in the back, and we're going to be their chauffeur through retirement, and we're going to handle it. But all of them know that we're going to look at the big picture, look at all the pieces, and we're going to point them in the direction that's going to do them the best, whether that involves us or not. Again, that kind of comes back to being a fiduciary, and if they're in great shape and they don't need any fine-tuning from what we can do, we'll let them know that, and we can part as friends.
Absolutely. Well, Stewart, we have about a minute and a half left of the show this week. Any final tidbits of advice you want to share with the viewing audience?
Absolutely. The one thing that the major question we get all the time from clients is, hey, you guys talk about all this Roth conversion and tax planning and so forth. If it's such a good idea to do a Roth conversion or to contribute to a Roth, why didn't my advisor tell me that before? Well, at the end of the day, one thing you have to remember is that if you're in a regular 401k or IRA and you have this big account that's in all tax deferred, somebody has to pay taxes on that one day. And what the advisors realize is that if you have this big tax time bomb, you're never going to unwind it. And what that means is you never get to enjoy your retirement, right? People are so scared of the tax bill that they never get to actually enjoy life. All of that money you've saved your whole life, you want to make sure you have access to in the most efficient way possible.
Absolutely. Well, gentlemen, I can't believe we're almost to the end of another great show. I love the time that we spend together every week, so thank you for all the information that you provide to the viewers at home. I know they're soaking it up like a sponge. Look forward to next week. To the viewers at home, thank you so much for spending time with us again this week. That number to call once again is 833-652-7829. We know you have a lot of questions about taxes, retirement, portfolio review. All you have to do is pick up the phone and call 833-652-7829. Be safe, be happy, be blessed, and we look forward to seeing you back again next week.